Good morning, and thank you for joining today's daily webinar. So welcome to another episode from my solo 401k financial. If you are self-employed or a small business owner with no full-time employees, you've probably heard that a solo 401k is one of the most powerful retirement tools out there. Please subscribe to our YouTube channel so you don't miss future webinars, and you will also receive future reminders. Please also don't hesitate to shoot your questions during the live session. Go ahead and shoot those over. We'll pause and answer those as they come in. Today's daily webinar is for educational purposes. Looks like we have a question here. So let's take a look at that. So the question is, I have a solo 401k at Fidelity. Does your firm help me out? Some new rules. For example, I cannot invest in a Roth. Also, can I alter other eligibility rules of the solo 401k? So yes, our firm does offer solo 401k plans, and we can actually help you to restate. That is, change your solo 401k from Fidelity to our solo 401k plan, which is a robust plan in that it allows for all contribution types from employee contributions, employer contributions to voluntary after-tax contributions. And of course, Roth employee and Roth employer contributions are also allowed. So the answer is yes. With respect to regulations, yes, we consult on the regulations on a daily basis. Here's a prime example. We handle not only incoming questions, but we also put on daily webinars regarding certain topics. Today's topic is, can I make a lump sum contribution to my solo 401k plan? Lastly, our plan is already drafted for the maximum flexibility under the law, which means that you can use it to not only hold the Roth and pre-tax funds, but you can also process a 401k participant loan. You can also invest in equities as well as alternative investments. It also comes with the auto contribution credit, which is $1,500. Essentially, the government is subsidizing your solo 401k costs for many years by opening a solo 401k plan with a provider such as my solo 401k financial, who offers a plan that has the auto contribution built into it. The way the auto contribution works is that if you open it with a plan provider such as my solo 401k financial, who offers a plan that comes with the auto contribution credit, then you're going to be able to deduct the cost of having a solo 401k plan over 3 years. Specifically, you'll be able to take a $500 deduction per year for 3 years. So $500 increments for each year over 3 years for a total of $1,500. We have a lot of good information on our website regarding this auto contribution credit, and both new clients and existing clients qualify. If you're a client of my solo 401k financial, the auto contribution credit was not available till January 1st of 2024 and after. So if you're a client for any year prior to that, we can update your plan so that you now qualify for the auto contribution credit. Of course, new clients that sign up now, they will automatically qualify for the auto contribution credit and will automatically include it in the plan. Let me send over a link that talks more about the auto contribution credit. Let's see here. I'm going to shoot that link over. All right, I just shot that over, so take a look at that. Looks like we have another question here. So there's the link to that auto contribution credit. Another question here is, but don't you have to do funding of auto contributions as being in plan document sufficient? No, you're not required to contribute in order to qualify for the auto contribution credit. That's the great thing about it, is that you need to have a plan document along with specific documents to come with the plan that allow for it, but you're not required. to make contributions to the plan. As a matter of fact, you can contribute in whatever amounts you want up to the overall contribution limit. And you're going to find out more about that by reviewing that link I just sent over. All right, let's see here. We have any other questions here? A question here. Where are the funds held at? You get to choose where to hold the funds. That's the great thing about opening a solo 401k plan with my solo 401k financial versus our competition, in that we let you choose where you want to hold your funds at. It can be held at your local bank, local credit union, or a brokerage firm like Fidelity or Schwab. Many of our competitors will force you to go to a certain holding institution because oftentimes they get a kickback. So here at my solo 401k financial, we don't get kickbacks, number one. And number two, we let you choose where to hold the money at. All right, let's see here if we have any other questions for now. Again, go ahead and shoot over any other questions you have, and we'll pause as we cover today's topic, which is, can I make a lump sum contribution to my solo 401k? So again, please subscribe to our YouTube channel so you don't miss future webinars, and so that you are notified when we hold these daily webinars, so that you can jump on and continue asking your questions here, whether it's regarding today's specific topic, which is, can I make lump sum contributions to my solo 401k, or other topics. So you might be wondering, is there a deadline for lump sum contributions? Does it matter if I make the contribution all at once or in smaller chunks? How do I report solo contributions to the IRS, especially if it's for the prior tax year? And how does that impact my tax deduction or Roth strategy? So in this webinar, we're going to break it all down for you. We're going to talk about how lump sum contributions work, employee versus employer contributions, what you need to know about deadlines, common mistakes to avoid, and how to maximize your contribution strategy, especially if you are trying to catch up or reduce your taxable income quickly. All right, looks like we have another question here. Let's take a look at that, and then we'll come back. Let's see here. No, your understanding is not correct. We don't have our own investment platform. That's the great thing about utilizing our company. You get to choose where to hold the money at. For example, if you decide to use Fidelity to hold the money for the plan that we offer, you're going to be able to invest in equities through that Fidelity brokerage account. What is more, you're also going to be able to invest in alternative investments like real estate, promissory notes, private equity. That's because our plan is the one that allows for those types of alternative investments. Our plan will also allow you to take a loan from it. So again, we don't hold your money. You get to choose where you hold your money at. That's why we have thousands of accounts, because people like the fact that we don't have access to your money, but at the same time, we're the experts in the field and we're handling the compliance reporting. And you can come to us for compliance questions. All right, let's see if we have any other questions here. Here's a question here from, I have a 401k and 401k Roth from my previous employer. If they get rolled over to IRA, Roth IRA, can they later be lump sum to a solo 401k Roth? So the pre-tax IRA funds, so traditional IRA funds, can be transferred to the solo 401k later on. However, a Roth IRA can never be transferred to a solo 401k. That's a Roth IRA restriction, not a solo 401k restriction. So the Roth IRA regulations do not allow for the transfer of a Roth IRA to a Roth solo 401k. Therefore, if you want to transfer your Roth 401k former employer 401k funds to the solo 401k, you would need to do that now by transferring it directly from the former employer Roth 401k to the Roth solo 401k. All right, let's see here. Another question here. My wife left employer long back. She owns an LLC. Now we're planning to buy a property where we would like to invest the 401k fund. We would like to know whether a solo 401k IRA LLC is the best fit, or anyone your team will help us transfer funds from former employer to your 401k offer. we want this disbursement to be tax free. Please advise. Certainly. Our solo 401k plan allows for investment in real estate. We would assist you in transferring the former employer plan over to the solo 401k, which can be held at Fidelity, Schwab, your local bank or credit union, for example. And it's because our plan allows for investment in real estate, you'll be able to wire the funds out directly to the title company for that real estate investment. And we have a procedure that we would walk you through for making that type of investment. What is more, you cannot use that property for personal use. It has to be used for investment purposes, meaning you cannot rent it out to yourself, your children, or your parents. To name a few, you would have to rent it out to an unrelated party. All the rental income would flow back to the solo 401k. Same thing with the LLC, the IRA LLC, which we offer. The solo 401k is typically better from a cost perspective over the IRA LLC. It also has less red tape. Let me send over a link that you can look at. It talks more about the solo 401k versus the IRA LLC. Give me just a moment here. Here's the link here. So take a look at that. Okay, so let's get back to our presentation here. We'll continue to go over questions as they come in. So yes, you can make a lump sum contribution to your solo 401k plan. You don't have to make them periodically. As a matter of fact, many of our clients wait to make contributions by their business tax return due date plus timely filed extension. The regulations allow you to contribute both employee and employer solo 401k contributions by your business tax return due date plus timely filed extension. For example, if you open a solo 401k plan here in 2025, you can wait to make 2025 contributions in 2026 by your business tax return due date plus timely filed extension. So as long as you open that solo 401k plan by December 31st, you can start making contributions now, or you can wait and make all contributions next year in 2026 for 2025. So for example, if let's say Jane opens a solo 401k today, Jane can start making contributions now based on her net self-employment income from 2025, or she can wait and make contributions next year in 2026 by her business tax return due date plus timely filed extension. You can also make employee and employer contributions, as I stated, periodically or by your business tax return due date plus timely filed extension. So those rules apply to both employee and employer contributions, meaning that you're not required to make periodic contributions, but instead you can make them in one lump sum. Also, with respect to deadlines, going back to Jane's example, let's say Jane instead waits to open the solo 401k plan next year in 2026. Well, if Jane waits until 2026 to open that solo 401k plan, she's still going to be able to make contributions for tax year 2025. That's assuming that Jane's self-employed business is taxed as an S corporation. She'll be able to make both employer contributions and voluntary after-tax contributions if she waits until 2026 to open the solo 401k plan, that is. So it's going to be better if Jane opens that solo 401k plan here in 2025 by December 31st of 2025, so that she can make all contribution types in 2026 by her business tax return due date plus timely filed extension. That would be both employee and employer contributions. So one of the big takeaways with respect to contributions is that if you want to be able to preserve the right to make all all contribution types, that is all solo 401k contribution types, so employee, employer, and voluntary after-tax contributions, you're going to want to open that solo 401k plan by December 31st of 2025, so that then you can take your time and make your 2025 contributions next year. That's employee, employer, and voluntary after-tax. If you wait till January 2026 and after, then you're only going to be able to make employer and voluntary after-tax contributions, and you can do so by the business tax return due date plus timely filed extension in 2026. So for an S corporation, that would be September 15 of 2026 to make 2025 contributions. So those are common mistakes to avoid, is thinking that you're going to have time to make all of your contribution types. The rules are different depending on whether you're making employee or employer contributions. Now, you also want to make sure that you report those contributions after you make them. So reporting contributions for a solo 401k plan really depends on how your self-employed business is taxed. Let me share a page from our website and we'll go over briefly over some of those contribution reporting rules. Give me just a moment here and I'm going to share my screen with you. Let's see here. Okay, you should be able to see my screen now. So contributions are reported on your tax return depending on how your self-employed business is taxed. So for example, if your business is taxed as a sole proprietorship, or whether it's an LLC taxed as a sole proprietorship, the contributions are going to be reported on your Schedule 1, line 16, which is an amendment to Form 1040. That's where you're going to report employee and employer contributions if you make them as a pre-tax. Now, Roth employer contributions do not get reported anywhere on your tax return when your business is taxed as a sole proprietorship. So with respect to voluntary after-tax contributions, those get reported on a Form 1099-R when that conversion is reported to the IRS as part of the mega backdoor. Now, if your business is taxed as a partnership, or if it's an LLC taxed as a partnership, then the employee and employer contributions are reported on a Schedule 1 as well as Schedule K1, and that's if you make those as pre-tax contributions. The voluntary after-tax contributions get reported on a 1099-R as well when it's a partnership. So keep those type of items in mind. And again, this page here outlines how to report contributions. We're going over this at a high level because we've done presentations specific on how to report contributions in the past. Now, if it's an S corporation, again, then if we're talking about an S corporation, the contributions will be reported on a Form 1120S, and that's going to be for pre-tax contributions. If you're making them as an employer pre-tax contribution, they get reported on line 17 of that 1120S. If you're making voluntary after-tax contributions to the solo 401k and your self-employed business is taxed with an S corporation, those will get reported in box 14 of the Form W-2. It's an optional reporting. You don't have to report them on that W-2, but you can. That's if you're making voluntary after-tax contributions. So keep that in mind. If you're reporting employee Roth contributions, those get reported on box 12A of the Form W-2 using code AA, and you want to check off the box 13. So again, this is just a high level of how to report those contributions. Let me share this link here so that you have it for reference. There we go. I just will going ahead and share that link with you. All right, let's go ahead and we're going to check to see if we have any other questions here. And we'll go ahead and talk about those. Give me just a moment here while I get to those. Okay, so we have a question here. Let's see. Where is that at here? Give me a moment here while I scroll down these. The questions we've already answered. One moment here. Okay, well, it looks like I don't see any other questions. I thought we had missed a question there. Wanted to make sure we didn't miss any questions. So again, thank you for joining today's daily webinar. Please subscribe to our channel so that you don't miss future webinars and so that you also receive future reminders. We'll be live again today at 1 p.m. Pacific time, and we'll be back again tomorrow. Until next time, have a good rest of the day.